Good morning, everyone. Thank you so much for joining us today. I do hope you're all well, and I hope you managed to survive the wintry weather we've had recently. So can we start, please, with some introductions? My name is Avril Craig. I'm the payroll manager here at Henderson, Loggie. I'm joined today with by my colleague Ricky Clark from Henderson Loggie Financial Planning. And together we're going to take you through what we see as the benefits of reviewing your workplace pensions. To begin with, I'll talk you through a payroll focused review. Then I'll hand over to Ricky, who will give you his insight into the financial services aspect of workplace pensions. There'll be time at the end of the session for questions, so please do enter your questions into the chat box. And remember, all questions are anonymous. If you prefer, you're welcome just to contact Ricky or myself directly by email. Our contact details will be shown at the end of the session. So for my part, I will go over a brief review of what's happened from your staging date till now, the impact of the coronavirus job retention scheme on workplace pensions, the common pitfalls and errors we see from the payroll processing perspective. Then Ricky will take you through the importance of reviewing your workplace pension arrangements. He'll go over different options, then he'll talk about the benefits of retained services. We'll wrap up the service with a live Q&A session. So you can enter your questions throughout the session if anything arises. You may wish to take notes through the session, but in any case, there will be a recording of this made available to you. So let's have a look at what's happened from your initial staging date until now. I'll go over a very brief history of auto-enrolment. Auto-enrolment was first introduced in 2012. It was brought in stages, starting with the largest employers. Eventually, all employers were auto-enrolling by February 2018. The idea behind auto-enrolment was to get all of us saving for our retirement. A state pension simply will not be enough to live on. The term auto-enrolment means employers must automatically enrol certain categories of employees into a qualifying workplace pension scheme, whether they want to be enrolled or not. It's the employer's duty to enrol them. The employee can opt out, but the employer must take care of their duties and always enrol eligible employees. The employer's duties also extend to things like issuing statutory communications to the employees, also remembering to assess the workforce every payday, paying the contributions to the pension provider on time, and reporting to the pension regulator as required. So, if you're doing all of these things regularly, then that is a great start. Some things I would maybe like you to consider. So, initially when you staged, how did you go about choosing your pension scheme? At staging, many employers were, for whatever reason, caught off guard with the introduction of auto-enrolment, and the decisions they made on the pension schemes were often pushed through at the 11th hour. And quite often this led to employers choosing their pension scheme based on what's cheapest, what's easiest, what ticks the compliance boxes so that I don't get into bother. It might well be that the scheme that you chose at the time was the right choice, but maybe think about if it's still the right choice for you. That is definitely something you should review. The sort of things you might take into account are, perhaps when you staged, you had 4 employees and now you've got 20. So perhaps there are bigger and better options open to you and to your employees. What about the type of pension scheme you have? Do you understand your type of pension scheme? Actually, you would be amazed how many employers don't. Very briefly, the main types of scheme are qualifying earning schemes. Now, this is where the employees' deductions and employers' deductions are based on the band of earnings that are subject to employee NIC. So on a monthly pay, that's all amounts over £520 and below 4,167. So that all monies within that band of earning are subject to pension contributions. We also have Tier 1 pension schemes where pensionable pay must be equal to or more than the basic pay. We've got Tier 2 schemes where pensionable pay must be at least 85% of total earnings over a period of time. And then you have Tier 3 schemes where pensionable pay equals all pay. Now, if you have a Tier 1, 2 or 3 scheme, you're likely to be required to do certification work periodically to show that you're sticking to the requirements. I would urge all of you to think about if you fully understand the scheme type you have and the requirements of the scheme. Another thing I would like to focus on is tax relief for your employee pension contributions. There's two main ways to provide tax relief. One is called net pay arrangement. This is where the contribution is deducted from the gross pay before tax is worked out. And that way, the employee is getting tax relief on their contribution. Another way is called relief at source. That's where the employee's contribution is taken from their net pay, but it's reduced by 20%. So although the employee is paying less, the pension provider tops up the contribution with the tax relief available from HMRC, so the full contribution is going into their pension pot. There are other methods, which Ricky will go into, but if you can understand the various methods, you can begin to think about what's right for you and your employees. Now, triennial re-enrolment, this is coming up for a lot of employers now. So when you initially staged, you enrolled everyone and you sent a declaration of compliance to the pension regulator, and that was the job done. But you must remember that you have to go through this process again every 3 years. So that's 3 years after your staging date and every 3 years thereafter. Employers must re-enroll any employee who's opted out and then file a report with the pension regulator. This is called a re-declaration of compliance. Please, I really urge you not to miss this task because you will be fined by the pension regulator if you do. Now, on this point, it's worth reviewing your internal contact with the pension regulator. If it was set up 3 years ago or more, is that contact still within your organisation? So are you receiving reminders from the pension regulator? It might have been somebody that's left, so that's definitely worth checking to see if your contacts with the pension regulator are up to date. So let's have a little look at the impact of the coronavirus job retention scheme on workplace pensions. One important point to note, furlough pay is a pensionable pay element. It's important to remember this. It's just like regular salary. Earlier on, I outlined the various types of schemes. So if you understand your pension scheme and the treatment of pension contributions, you'll make sure, this will help you to make sure that your furlough pay and any top-up pay is treated correctly for pension contributions. Unfortunately, many employees have been furloughed for a long period of time and receiving 80% of their pay, sometimes 80% of a historic pay amount. So this is obviously going to result in them paying over much less contributions than they would normally, and the employer is paying over less too. So that's going to give an impact on their pension savings. It's definitely something worth thinking about as when you're reviewing your workplace pension arrangements. Maybe there's a way you can help them to make up the shortfall. Have you made an agreement with your furloughed employees? When you entered into this arrangement to reduce salary, did your agreement extend to covering reduced pension contributions too. It's definitely worth checking that you've done this correctly. Now, salary sacrifice and furlough pay is a little bit tricky. So I've not really mentioned salary sacrifice, as Ricky's going to go into this in more detail, but it's worth mentioning that furlough pay is post-sacrifice pay and it can't be reduced by a salary sacrifice pension. So if you do have a salary sacrifice pension arrangement, the furlough pay would have to be grossed up so that once the pension is deducted, it comes back to the original furlough amount or higher if that was your choice at the time. Now, over the years, I've seen lots of strange things happening with pension scheme setups in payroll. So I'm going to go over some of the common errors and pitfalls that we've seen from the payroll perspective. First of all, one thing that does tend to go wrong quite often is the tax relief method. I mentioned earlier on that the main types of tax relief on employee pension contributions, there's different methods of giving relief. Now, I've seen instances where employers have inadvertently deducted the employee pension contribution from the gross pay before calculating tax, but actually it turns out the scheme is a relief at source scheme. So this means that the pension provider is also topping up the contribution with a tax credit. Effectively, this is giving the employee tax relief twice. And believe me, it's a messy business to sort out. Another thing I've seen from time to time is employers just giving no tax relief at all to pension contributions. So that's a bit unfair on the employee. If they find it, it's easy for them to sort, but still not very fair. To be honest, it's very easy to get this wrong. Once you set up the scheme wrongly in your payroll software, the error carries on month after month. The key to getting this right is understanding how tax relief works on your scheme and sense checking the calculations to ensure it's operating correctly. Now, types of scheme. Again, understanding the types of scheme helps you to ensure you understand which pay components are subject to pension contributions. I've actually seen cases where employers are in a Tier 3 scheme and they forget to deduct pension from overtime or bonus, simply because the pay component is set up wrongly in payroll. I've also seen employers deduct pension from a bonus where they didn't need to because the scheme was perhaps a Tier 2 scheme. A costly mistake for the employer. Now, the key to getting this right is understanding the type of scheme you have and ensuring you know which pay elements are and aren't pensionable according to your scheme rules. When it comes to uploading contributions, make sure your contributions are uploaded very soon after the payroll is agreed and approved. Pension providers have tight timescales and they will report you to the pension regulator if you are late, and this could potentially result in fines. Another thing to think about is how do you upload your contributions? Do you use auto feeds and CSV uploads? It's a great idea to use them because they reduce errors because there is no keying in data. If you can, I would move away from actually keying in pension contributions to pension portal. I've actually witnessed keying errors leading to the wrong contributions going to the wrong employee. Automation is by far the best option, but in any case, it's always good to check that your uploads are correct. I mentioned earlier that all eligible employees need to be enrolled into a pension scheme. Now, sometimes, particularly new employees or employees that are subject to re-enrolment, they can be quite forceful and saying they don't want to be enrolled. But please don't be swayed by this. Let them know you're obliged to enrol them and they can opt out if they want to. The same applies to re-enrolment. There is no option for employees. They must be re-enrolled and then later they can opt out if they want to. This would be a good time to mention statutory communications. Your payroll software or external assessment software should automatically produce the necessary letters for your employees when they join your employment, when they're postponed or when they become eligible. You're obliged to issue these letters within the required timeframes. The pension regulator could fine you for not doing so. So please don't forget about your statutory communications. Now, one final point from me. An employer should always be encouraging when it comes to enrolling into workplace pensions. Actually, this is a requirement, and definitely you should never be discouraging. Providing information and resources to your employees about your workplace pension scheme and promoting enrolment is strongly recommended. So from all of that, I would say the key takeaways are: please make sure you understand all aspects of your pension scheme, how the tax relief works, what the contribution basis is, and which pay elements are pensionable. Take time to understand your obligations as an employer when it comes to issuing communications, reporting to the pension regulator, and how you communicate with your employees about workplace pensions. I would also encourage you to build in a regular checking process to your payroll processes to make sure that your uploads and deductions are spot on. So that's quite enough from me, I think. I want to thank you so much for listening. I'd now like to hand you over to my colleague, Ricky. I've provided our contact details here should you wish to talk to us directly.
Thank you, Avril. I'll just bear with me a second. I'll share my screen with you all. Okay. Okay, Avril, thank you. And thanks for covering some really important points with regards to reviewing your pension scheme. And she's pointed out some great bits and pieces there and some of the common mistakes that have been made. My part today is to consider the importance of the workplace pension and the importance of reviewing it and the benefits that you can see as an employer off the back of it, which then feed into your employees as well. I want to also enhance your knowledge and speak about salary exchange. It was probably commonly more recognised as salary sacrifice. And some of you listening today may already have this in place. So it's going to be a good refresher to help understand again. And for those that don't employ this with their own pension scheme, an opportunity to understand the benefits it can provide yourself and, of course, your employees. And then I'm just going to tie up with a chat around about the retained services. And I know that some of you are on this call today. I've helped set up pensions. I've spoken to you of salary exchange and also provide retained services. So thank you for joining. But let me move on to the first slide so that we can cover why should you review your pension. Now, Avril's covered the administrative side of it, running it. What I'm going to cover is the reasons why you should and how that filters through for your business and from an employee's perspective as well. Your pension's your second largest outlay in general terms alongside salary. So it really deserves your time. And that's all I've really got to say on it. The fact you've put in in place a pension scheme, and Avril touched on this, that it could be the case where you were just doing it to simply meet your initial auto-enrolment duties. Many of you may have had a pension scheme in place prior to auto-enrolment being brought in, but Often it was the case you were limited to the pension you could take out, and that might have been because you were entering in at the minimum contribution levels. It may have been because you had a smaller number of staff and therefore the bigger pension companies weren't available. So that's a great reason to be revisiting this, because you could indeed potentially get a better pension scheme for yourself. One of the great reasons to review this is it improves your company's understanding of the pension. So how does it work? You know, with regards to your employees becoming more aware of the pensions and what the employer offers you. I think that's a key point I would make from this, that your employees are becoming more aware of pensions nowadays. We all know that retirement's getting pushed back. We know that the pensions are available at every single company now. Auto-enrolment has brought that sort of blanket over everybody that you have to provide a pension. So it's become a real focus for employers, the pension itself and how that becomes a part of the package. It also keeps you on top of your workplace pension requirements. Avril's covered this. It's important to look at re-enrolment. What's the process you have internally? If you don't have somebody like Payroll dealing with the uploading of pension contributions, who does it internally? Is it done on time? Do you deliver the communications within the right timeframes? So it's important to be aware of this. So reviewing ongoing will help you identify this as well. It's also a way to continually promote your benefit to staff. As I've already mentioned, the pension's a massive outlay to a company in general terms. So if you are able to promote your pension to staff and make them aware of what you've got in place for them, it's always going to look good for yourselves, but it'll also help the company itself understand exactly what it's got and realise it's an integral part of their package. Also, a big reason, in my opinion, to review a pension ongoing is it can potentially save the company money. So if you're looking at a pension scheme that you've got in place, are you paying charges for it? Have you got a financial advisory firm that are working on your behalf? Are you getting what you need out of them? And also to be able to review things like salary exchange, which I'll come on to next. So there's a lot of benefits, reasons why you should, and that's covered in this slide here. Moving on to the next slide is it's kind of collaborates with the previous slide, some of the points I've made here. But by reviewing your pension ongoing, you're going to be able to eliminate some of the administrative problems that Avril's highlighted, such as, are you deducting the right amount for the way that your pension scheme's set up? Is the pension scheme appropriate for your company and employees going forward? Was it a basic pension? Could it be better? Having an internal team that look after, whether you've got internal payroll or financial directors or admin that are looking after the scheme itself and deducting and uploading, it's important for them to know how it works. So it'll increase that knowledge, and it'll help when employees ask questions as well. Do you know how your pension even performs? There is investment within it, and you're not under no obligation to run. We're not investment managers at employers, but it's important to understand that the pension you have in place is meeting what you expect it to, because it is part of an individual's longer term pension planning. I think one of the benefits I've seen the most through individuals and clients that I have dealt with through provision of pension clinics or retained services is that when an employer engages with their staff, it helps the individual, the member of staff themselves, understand their pension. I've seen increased contribution levels from companies that are able to engage with their staff, and they have just a general all-round better awareness of what their pension scheme is, and they appreciate that actually what the employer are doing for them is of benefit for them. By reviewing your plan, the benefit would be that you could make meaningful plans to engage, as I've already said. And again, thinking about their understanding of retirement savings. And if you're delivering a session with them on an annual basis, so they understand how it's been performing and how they can increase contributions, how they can nominate the beneficiaries, which is actually a surprising thing where not many people do when they've got their pensions on death. It passes on to your loved ones. These are the types of things that by providing staff these sessions can increase that engagement, and overall it's going to benefit the company. And the final point of a great benefit would be looking at the longer term outcomes for your business, but also your employees. And what I mean by that is, if you look at your pension scheme, if you're paying charges for it, if you think it could be in a better place, you could be saving money long term. And the point I'm away to come on to in the next few slides, if you implemented salary exchange, you could be looking to save yourself quite significant amounts of money ongoing, as well as your employees. So those slides are really covering the why it's important and the benefits of looking at your pension scheme ongoing. I think there's a lot to be taken out of that. But this time today, I thought it'd be brilliant to go through salary exchange and tell you a little bit about it and how it can save money for yourself, your individual members of staff. And let's move on to that now so we can go over that. So what is salary exchange? As I've said, it was always known as salary sacrifice, but they've softened the wording. Nobody likes to sacrifice anything, so we've called it salary exchange now. But what it is, it's an agreement between me as an employee and my employer to exchange a percentage of my pension, and it's then paid to my pension. So what I'm agreeing is a percentage of my gross salary. So if I used an example of £30,000, which I will show you in a couple of slides time, and was paying 5% pension contribution, that would be £1,500 a year. I'm then saying to my company, take that £1,500, don't pay me, pay it right to my pension. And there's significant tax and national insurance benefits for me, and national insurance contribution benefits for the employer yourselves by encouraging those to do this. And again, if we move on to the next slide, there are the real benefits as listed here. So that percentage of 30,000 I've just given up as that example, the 5%, if I'm that member that joins, the company's going to save 13.8% national insurance contributions on that 5%. Now, to me, that's a savings that is not to be passed up. But ultimately, it also benefits your employee. They don't pay tax or national insurance on that element or percentage that they exchange in lieu of a pension payment. So what you're finding here is it benefits basic rate taxpayers, higher rate taxpayers, and also additional rate taxpayers. And off the back of setting up salary exchange as an option within your pension, you don't need to have everybody in salary exchange, because it's a choice by me, the employee. I could continue to do it as on a relief at source basis, like Avril's explained. There's different ways you can do it, but having this sitting alongside your setup as an option has great savings and benefits. And some of the business opportunities for you could be that the national insurance contributions you make, you could use them as you see fit. They are savings at the end of the day. You could partially pay some of those national insurance contributions back to an individual's pension, or simply pay a bit, the whole lot back. And that would cost you nothing. You're simply saving the national insurance contributions on the part that they exchange. Again, it could be used in different areas of the business. So if you have death and service covers, anything that you think that would enhance the package of it for your employees, it could be used in that way. And also, finally, having a salary exchange option is just going to be a great enhancement to your overall package in general anyway. This leads me on nicely to show you a couple of slides to illustrate the benefits to you as an employer and then to an employee in the next slide. And I'm not going to go into great detail of these slides, but what you should be aware of is the saving. And in this example, I've used the £30,000. I've used the minimum contribution requirements set by legislative requirements, the pension regulator. It is a tongue twister, Avril, but I've thrown it in there. But the pension regulator set at the 3 and the 5%. So at the very minimum, 5% would be paid over by an individual employee. And by doing it on a salary exchange basis, you, the company, would save £244 in this example for national insurance contribution savings. Now, for me, for one person on £30,000, that's a good saving for the company. And my simple maths and using a calculator, I've multiplied that up to illustrate to you what that would be for 10 employees, 20 employees and 30. And as you can see, the more and more that join, the more significant that amount of savings becomes. And you will have basically the choice of doing whatever you like with that. That could be paying it back into the pension, using it for something else. In the times that we are living in at the moment, maybe other areas of the business could be doing with that sort of money. So if you have salary exchange in place at the moment, and this is just a refresher, it shows you it's worthwhile revisiting in this and encouraging your staff to get involved in it. And of course, if you don't, well, is it worth doing the exercise to get something like this set up and to offer it for the business to benefit from? But on the other side, we have the employee, which is just important as anything for part of your business. They are the ones that help run the business. And ultimately, if you used myself as the example, if I was your employee and I signed up on a salary exchange basis, I'm looking at making pretty good savings as well as a basic rate taxpayer. I'm not going to be paying tax on that element that I'm giving up to be paid to my pension, but I'm also saving national insurance contribution savings. In this example, the national insurance contribution savings I'm making are paid back into the pension, and that's generally the way I would look to set something like this up for a client. However, as you can see, by doing so, changing to, rather than a relief at source method, to a salary exchange, my pension's better off £269 per annum. Now, it may be even better off if the employer paid some back, but that's not my decision. But you would hope they would, potentially. But what this also shows is anybody that joins on a salary exchange basis can save money. And this is for basic rate taxpayers and higher rate taxpayers. So the key takeaway for you today from considering salary exchange is you can make significant national insurance contribution savings. You could reinvest them any way you wish. Your employees will benefit financially as well. Their net pay is no worse for simply changing, but their pension will gain better over the years. And that is a significant improvement for anybody. Your overall package to your employee becomes good as well, because you've got that option to do that. And certainly the final point is valid. Higher rate taxpayers on a relief at source method would have to complete a tax return, which I'm sure many of our accountants in the HL department would love to help with the tax returns, but you'd have to claim to get your higher rate tax back. And in my experience, this just doesn't happen. So setting up a salary exchange, and for those to be encouraged to be in it, if you're a higher rate taxpayer, you're going to have a significant benefit because you'll get higher rate tax relief at the very top as well. So some fantastic savings to be made out of a salary exchange setup, and something I would encourage everybody to visit, to have a look at and visit. And if you wanted to have a chat with Avril or myself, of course, we'd be delighted to do so. Finally, I just want to cover the retained services and why you would think about having a retained pension service with a financial advisory firm, whether that be yourselves or another. It really encapsulates everything that Avril and I have spoken about today. It's about governance. It's about revisiting your pension, ensuring it continues to be the right thing. Some of our services can be tailored to your complete needs. You can do the full list that's here, or you could do just some of them. We can come in and re-educate staff on how good the pension schemes are. we can come in and just help about salary sacrifice. But certainly our retained services package can provide a whole list of great benefits to you, the business, and to the employees, and overall really enhance that package of your pension being really integral to the part of your overall employed package. Again, Avril's covered some really, really important points there about compliance, re-enrolment that many of you will be seeing. I know that somebody mentioned that to me recently. And again, these are things that Avril and the team can help if you're getting your payroll done with them. But certainly if you've got internal payroll, you would really have to focus on that yourself. On my side of it, it's just about looking at your pension, understanding it, and looking at options and solutions that could potentially enhance the overall feeling that staff have towards it internally as well for your own benefits. And there's real good savings to be made if you considered salary exchange as well. So thanks for your time today. We do have a little bit of time for some questions. I am going to stop sharing my screen now and pass over to Avril. I believe you've got a couple of questions, and I'll pass over now and let you deal with those first and come back to me.
Lovely, thanks, Ricky. I've got a couple of questions here. So the first question actually ties in with what Ricky's just been saying a minute ago about tax relief. Oh, excuse me, I've just lost it now. Here we go. Right, so someone's asked me, you mentioned there was different ways to provide tax relief on employee pension contributions. So which way is the best? Now, there isn't a best way. They each do have their advantages. Now, here I'm considering the net pay arrangement and the relief at source. Obviously, Ricky's talked about salary exchange, and that ties in with this as well. So with the net pay arrangement scheme, where the contribution is deducted from the gross pay before tax is calculated, well, I would say this is best for higher rate taxpayers because it means they're getting their full tax relief month by month, not just 20%. So they don't have to do a personal tax return, and it just means they're getting all the relief as each month goes by. And that's the same for salary exchange. The relief at source method, I think it's better for people, lower earners, people that are earning between the £10,000 threshold and up to particularly up to the 12,500, personal allowance. These lower earnings are still getting their government top up, which would otherwise be denied if they were in a net pay arrangement scheme. So just to round off, there isn't a best one. It depends on the profile of your workforce. With regards to my workplace pension scheme, how do I find out the ins and outs of how it works so that I can review this and ensure it's all being operated okay? In that case, I would refer to the documentation issued by your pension provider, or contact them via your online account to discuss and just get all the facts and read up on it. Most of the pension providers, rather, that I deal with are very happy to help and they're easy to talk to. You have to make sure, this ties in with what I said about the pension regulator contact, make sure that you are their point of contact and you have authority to speak to them. But in first instance, talk to your pension provider and make sure that you're happy that all the arrangements you've got are in place. So, okay, Ricky, it's your turn.
Thank you. Okay, so I've got a couple of questions that have come through actually live at the moment, so I'll just answer these actually. I did have a couple that we received before this, but one of them has come through. Is there a maximum percentage that an employee can give in a salary exchange scheme? Well, again, there is in the terms of you can't exchange somebody's salary so that it would fall below the minimum wage bracket. I think that's something Avril would agree with you. Again, if you were looking at anybody that's going into salary exchange, that you've got to be careful and make sure that the right person knows exactly what's involved with going in. But yes, it's unlikely that somebody that's near that minimum wage level would want to join on that basis. So yeah, that would probably be the maximum, but we all have our maximum pension contribution limits that we can put in per annum, which is £40,000 per annum, or up to 100% of your salary. So if you can put that in, brilliant. So that hopefully that covers that question. I've got another one that's come through here. Are the contribution requirements likely to change, and in which case could you see the exchange at some point not being allowable? Well, at the moment, the minimum's 3% employer and 5% employee. There is no word of them changing at this moment in time, so I can't comment on that exactly. I think they would be pushed to put them up at the moment. And is the potential of salary exchange being stopped looked at? They always look at things that have any tax benefits to us. So I can't also comment on that, but salary exchange has been on the go for a long time, and whilst it's available, I would encourage it. And also, it's certainly, in terms of pensions, in my opinion, the government are the ones who put auto-enrolment in place. So I believe that it's something they would maybe not want to look at. That might not give you the exact answer you want, but it's as good as I can give it that. But certainly, I don't see the contribution levels going up. Again, looking at the questions, actually, I know we've come over to me, Avril, but I've got one that's come through here, and it's Avril mentioned earlier on 3 different contribution calculations: qualifying, pensionable, total earnings. Can different employees be on different calculations for the same employer? Well, I think if you're happy enough for me to answer that, the answer is yes. I can see Avril nodding. I know it's yes. You could have a pension scheme where you have 3 different categories of worker, for example, directors, management, and standard employees, just as an example. And you could have one on total earnings, you could have one on basic earnings only, and you could have one on qualifying. So yeah, the answer is yes, you can. In my experience, when you set something like that up, you probably want to not do that. You probably want to keep it nice and consistent for fairness and, of course, for ease of administration going forward as well. I think that's us, and we've just about run out of time, but hopefully today you've been able to take something out of this. Certainly Avril's covered some amazing points regarding the importance of reviewing from an administrative side. Hopefully you've been able to take out the reasons why you would want to review your pension from myself. We've answered your questions. Anything that we've missed, we'll be sending out an email with our contact details and maybe some links to anything that we think would be relevant to you. But always remember, Avril and I are here to chat at any time, and we'd be delighted to speak to you about anything that's come up in our chat today. Anyway, thank you for your time, and all the best for the rest of your day. Thank you.